Okay, let's get back to Marketplace with M-Pesa, the iconic fintech product of Safaricom of Kenya, marking its 17th anniversary on Thursday. It's been nearly 20 years since the debut of M-Pesa, which currently operates in 7 African countries across Africa, boasting of $1 billion in transaction every day. And this is just the numbers. But these are the 7 countries where M-Pesa currently operates, basically from DR Congo to the entire East African coast. Then, of course, here in Cote d'Ivoire in West Africa. So that was how the journey has been since March 2007 of M-Pesa. And you look at the numbers earlier, with the $1 billion. Then you look at 60 million happy customers, 150 million transactions processed every day, and $6.3 billion annually in affordable credit. And that's the story. Congratulations to this iconic brand out of Africa. Now let's stick with East Africa, where Uganda's central bank this week held an emergency monetary policy meeting, raising the country's key lending rate by 0.5% to 10%. Let's listen to the acting central bank governor, Michael Atingo-Ego.
On March 6, 2024, a special monetary policy committee, MPC meeting, increased the central bank rate, CBR, to 10%. The unfolding of some of the risks mentioned in the monetary policy statement of February 2024, which includes the depreciation of the shilling exchange rate, has triggered the need for monetary policy to be tightened. The inflation outturns in February 2024 indicate that both headline and core inflation rose to 3.4% from 2.8% and 2.4% in January 2024, respectively. Whereas the main contributors to the rise in inflation are services and energy, fuel and utilities, this combined with the shilling depreciation could spill over into a generalized price. The exchange rate depreciation since November 2023, with a sharp depreciation in February 2024, was in part caused by the outflow of some offshore investor funds from the domestic market pursuing more attractive yields available in other markets, strong domestic demand, partly as a hedging mechanism against further depreciation and seasonal factors. Further exchange rate depreciation could drive inflation above the medium-term target of 5% by the second half of 2024. Additionally, whereas there are downward inflationary pressures arising from the continuing vanishing effects of supply-side shocks, receding inflation around the world, and improved domestic food supply, these are likely to be outweighed by the effects of a weaker shilling. The inflation trajectory going forward would be shaped by the outlook on the shilling and other goods inflation. The inflation forecasts have been revised upwards in the short term, that is 12-month horizon, in light of the exchange rate depreciation. Inflation is projected to rise above the medium-term target of 5% by Q1 of financial year 2024/25, and stay above 5% throughout 2025 unless monetary policy is tightened. Risks to inflation outlook remain highly dependent on global and domestic environment. Specifically, higher global commodity prices, partly due to geopolitical tension and an increase in shipping costs resulting from the Middle East conflict, as well as tighter global financial market conditions, could result in higher domestic inflation. MPC assessed the risks and the uncertainties of the outlook as being broadly on the upside. Economic growth for financial year 2023/2024 is projected to remain unchanged, with growth of 6%. However, economic growth in the outer years is projected in the range of 5.5% to 6.5% compared to an earlier projection of 6.5% to 7%. The downward revision of growth in the outer years largely reflects the likely impact of tighter monetary policy, which is required to stabilize inflation around the medium term.